Good morning and welcome to the June 23rd, 2019 edition of the Gold, Goats, and Guns Market Report. My name is Tom Luongo. I hope you're all having a great Sunday and, happy avoiding war with Iran Day. I don't have much else to say about that other than to thank all the new patrons. We picked up a few earlier this week. Also, we picked up a couple of, behind the scenes, a couple of very generous donations from people via PayPal and other means, so I have to be humbled by all that, honestly. So I do appreciate that you guys appreciate the work that I put into this. And again, as always, if there's anything in particular you want me to cover, please don't hesitate. Send me an email, send me a text on Twitter, ping me on Skype, whatever. You guys, anybody who's ping me on Patreon, whatever. I'll be happy to what's the word I'm looking for? Indulge whatever question it is that you have, because it's better for all of us if I can, disseminate, wisdom as best as I can based on, the questions you ask for the entire community. So that's the way we should consider this. Also, helping to try and drum up new business. I'm also sending these out, making these publicly available after about 2 weeks' time, so that people visiting the YouTube channel can get an idea of what it is that they're buying. So we'll see if that works. I don't know if it is or it isn't, but it seems to be working properly. And obviously, if you have not installed Brave at this point, I can't recommend it highly enough. Even like some of the most technically savvy people that are a member of this community have all said to me, wow, this thing is really fast. Really so much better than it was in earlier iterations. I'm like, yeah, right. At this point, as far as I'm concerned, it's the browser is very much, as a technical product, is very much ready for prime time. And I can also tell you that the donation streams coming in have also been encouraging in terms of their growth path over the course of the last 2 months. So also that's very good as well. Again, another way of ensuring that long term our community here is viable, because the more I can do this, the more I'm sustainable, the more I can continue to sustain doing work for you all and going on. So let's get right to the charts. Let's get right to the commentary this morning, then we'll get to the charts, which I have a few today. So I'm going to try and keep the commentary short, even though this has been a very, very tumultuous week. Since we last spoke, there was a near war incident between the United States and Iran. I have written fairly extensively about this already and talked fairly extensively about it. I had a good interview, I think, with Lee Stranahan and Garland Nixon on fault lines on Friday, which I posted up on the blog at tomluongo.me. And I think it's worth a listen to a lot of what we can understand was what's going on. I think the best way to look at this is that Trump is absolutely trapped and is now fronting to save face with his rabid base. I mean, when you see I don't know if you guys saw it, but I saw the footage from his kickoff rally in Orlando, and it was, it's insane, and it's a cult of personality thing, and this is both good and bad, because people want to believe that there's more there than there's there, right? I think there's less there than there is there, to kind of play on Gertrude Stein's criticism of Oakland. If you guys don't know, that's where that comes from. Gertrude Stein was asked about, what she thought about Oakland. She says there's not much there. And that's where that phrase comes from. Not that I'm a big fan of Gertrude Stein's work, but that line's pretty funny. So, so what I'm seeing from Trump, certainly this morning and yesterday and whatnot, it's all ties into what we know now, that we aren't sure that the drone didn't violate Iranian airspace. That the Iranians weren't justified. They could very possibly have been justified to have done what they've done. It also ties into the analysis that myself and others have put forward, that Iran is now free to poke the United States, because they have put the United States into the position of saying, look, it's either war or it's not. We're not going to give up our sovereignty. China's telling them the same thing. The Russians are telling them the same thing. And there comes a point where you can only saber rattle so much. You can only bully people so much. And eventually they're just going to say, fine, punch me in the nose. Okay. You punch me in the nose. Now what? You going to kill me? Well, no, I don't want to kill you. I just want your money. Well, no, you can't have it. You're going to have to kill me to get it. But if I kill you, then I'm going to go to jail. Exactly. So that's a line I don't want to cross. Because if I kill you, then it's really bad for me. Bingo. And that's where we are. And it's not even, in some ways I was listening to a podcast, or I think it was something called the Sirius Report that one of our subscribers linked in the Slack server yesterday. The guy said, look, it's, just very quickly going over the history of this. He said, look, you can't expect countries like Iran to submit to bullying like this. They're not going to do so. It would be suicidal for them to do so. They're just not. And it's an incredible miscalculation on the part of the historically and culturally tone-deaf advisors that Donald Trump has around him. And that they continue to peddle these ideas to him. And the fear here is still exactly where it's been from the beginning, which is that Netanyahu and Bolton and Pompeo and Haspel and the rest of them and major donors within the Republican Party are all going to try and push Trump to go to war with Iran, because this is their moment. They finally have the guy who will do it for them, and they won't. And they're not going to let this opportunity go. And the only thing holding anybody back at this point is the fact that Trump is facing re-election. So do we have status quo between now and November 2020 until after Trump's reelected? And then he can turn around and then start World War III? Or does Iran continue to push here in order to get Trump removed from office? And therefore the rest of the neocon crazies? Because if Trump doesn't fire Bolton in the next couple of weeks after the G20, if he doesn't fire Pompeo by the end of the next quarter, then he's useless. And he's just making it up as he goes along, which has been my dominant thesis for Donald Trump now for over a year. Or for at least a year. He doesn't know what he's doing. And all he and Netanyahu and Jared Kushner and the rest of them are doing are telling everybody, surrender or die. If you don't like this deal, in 6 months the deal is going to get worse. Okay. At some point, the deal becomes irrelevant. And they're like, okay, we're going to take the pain. And so much analysis comes from on all sides of the equation, be it the classic neoconservative equation or just the kind of an America-centric equation or side of the equation or whatever. Every one of these commentators all make the same mistake, which is in thinking that, yeah, it'll be terrible for China to lose a lot of U.S. trade. It'll be terrible for the Iranians to not be able to export oil. It'll be terrible for this. And they're going to do it if they have to. Because they know that their counterattacks, the weapons that they have, will be sufficient at this point to also take down the U.S. Because no one gets out of a trade war and a trade and embargo and tariff war alive if everybody's willing to go to the mat. And the people who have the least amount of stomach in this equation for the pain are the Americans and the Europeans. And therefore, they're the ones that are going to blink first. And I think we saw the beginning of that on Thursday. When Trump looked up and saw the potential existential threat to the financial system that Iran was boxing him into the course, inviting him in response to this stuff. I mean, the drone shoot down, guys, was Iran inviting Trump to overstep his bounds so that at that point they would be completely and utterly justified to then burn the financial system to the ground, to burn the Saudis, to burn the Emiratis, to burn everyone. They don't want to do it, but at a certain level, they're like, okay, if you guys are going to play this game, we're done. We're taking you with us. That'll be the end of it. And y'all won't be in power. Y'all won't have anything. The Saudis will get, the Saudi princes will get lynched if Iran unleashes its proxies across the Middle East and turns the whole thing into a 20-front war that the United States can't fight a 20-front war in the Middle East. I don't care how good our logistics are. That's what's on the table. That's what the Iranians said on Thursday. I think finally Trump got the message. Because if Trump didn't get the message, then Putin called him and told him, dude, this is what's going to happen. These people are serious and they're a little crazy. Just like you. And do you want to be a statesman? Do you want your face on Mount Rushmore? Climb off the mountain. And Trump begged Iran. Begged them to let him bomb some targets so that he could save face. And they told him to go pound sand. Which is exactly what they should have done. I'll tell you, that's exactly what I would have done. But like, no. Piss off. You put yourself in this situation, you get yourself out of it. Fire everybody. Tell Sheldon Adelson to go back to Las Vegas. And get out of your government. And tell Netanyahu to stand down. I can't do that. Well, then, deal with the consequences. Because the consequences for you are going to be terrible. I'm telling you, this has been my read for months, and I've listened, and I have people around me who spin very, very convincing arguments to the opposite, and I listen to them carefully, and I listen to them assiduously, and I really consider them, and then I go, that's all nonsense. It doesn't matter. You don't understand the damage that 15 guys in a hotel room in Dubai can do to the world financial system. I mean, come on. Just waiting to throw some C4 at a friggin' pumping station inside in the wilds of Saudi Arabia. It's not like they can't activate all the Shiites that live out there. Remember, the Saudis have a real problem. All the oil is pumped out of areas that are dominantly Shia. There's a fundamental problem here. You go to war with Iran, those people become radicals overnight. The whole thing is so monumentally stupid. I can't, the rational part of my brain, and even the irrational part, just can't process it all. And I'm like, I just want to sit Trump down one day and play some. Just play some basic freaking German Euro with him and go, see? Why did I lose? Because of this, and this. Because you didn't think this far ahead and you didn't think about these secondary effects. And I got news for you. The people on the defensive, Don, they have to think 6 moves ahead because it's their life on the line. You just are worried about your next election. So you make a move. And you just aggress. And then you wonder why you get countered. Crazy. All right. And amidst all of this, the Fed has had to go full dovish, and now we're looking at staring at interest rates next month. And look around the markets; it's all a safe haven trade. Every bit of it, everywhere, including Bitcoin, including gold, all of it. And we're going to show you the charts, and I'm going to show you where we are, because these are the charts of a world about to be set on financial fire. Let's start with gold. If gold closes June, which will be both a monthly and a quarterly close. And today is the 23rd, so June 30th is next Sunday. So next Friday is both the monthly and the quarterly close. It'll be the last trading day of June. We will open markets back up on July 1st. If gold closes at this level or even down $15 from here, this will be the beginning of a new gold bull market. I'm going to show you the monthly chart here, just to give you an idea. I've published this chart before. Many of you have seen this chart, but we have some new people, so it'll remind you. Note the series of higher lows. And note the flat top, strong resistance here. So if you turn this over, it's a flat bottom triangle, or now in the case of flat top triangle. Flat top triangles are bullish, and flat bottom triangles are bearish. Not that I'm a huge fan of these kinds of formations, because they're not particularly predictive. They tend in this direction, but to no quantifiable degree. Okay, and the quantifiability of your trading edge is what matters in how you set your hedges, how you set your pot odds, how you set your trade up. If you don't have quantifiable, risk to reward ratios, then you don't have the basis for trade. Okay, and that's the problem with qualitative technical analysis. Okay, you have to do some quantitative work, and you have to kind of dispense with drawing lines on charts and whatnot. I try to keep the line stuff as simple as possible, looking strictly at open, high, low, and close, and the relationship between bars. Again, just to remind everybody what I'm doing here. And I've had some questions recently asked of me about, do I do a volume by price overlap well, or do I, look at things like VWAP, which is volume weighted average price. No, I don't. Well, yes, I do, and yes, no, I don't. If I'm actively trading, I do. But I don't actively trade anymore. And the main reason is that I think we're actually adding too much into the analysis at that point. I don't think you need to look at volume weighted average price when you're looking at monthly and quarterly charts. I don't really think it's necessary. I think open, high, low, close, and previous support, previous highs and lows are all you really need to get an idea of what's happening here. Price action will tell you 90% of what you need, and then all you're doing is looking for confirmatory signals or the potential for the quickness of the move to the upside. But I think honestly, things like short interest and other and whatnot, I think those are all better examples of indicators that will tell you what the potential upside is on a move. Generally speaking, you can tell by looking at, if you just drill into a monthly chart, or if you drill into a monthly chart and look into a weekly and daily, you'll see gaps emerge on the chart, especially when you go to the daily chart. So it's something like gold, you'll see gaps emerge where you're like, well, that was a huge move. There wasn't a lot of volume there. So, there's a lot of air below this market, or there's not a lot of resistance above this market. And you can usually make that the case. I caution, again, I trade however you want. If you're actively trading, that's fine. Have your system work with it, and work it to your heart's content. But my point simply is that what's most important is price and time, not necessarily price and volume. So if you have a breakout on a daily level that turns into a weekly breakout, that turns into a monthly breakout, that turns into a quarterly breakout, that's far more powerful than whether or not it was done so at 5% above VWAP or not. Far more important, because we're looking for changes in state in the market. We're looking for changes in sentiment, right? And that's not necessarily going to show up in VWAP. But, again, salt the commentary to taste. And, I think that if I had better data packages available to me, I refuse to spend money on data packages. Certainly not until we have a hell of a lot more subscribers that I can afford one at, to add that to the analysis. I think keeping it as simple as possible is always the best route. I just do. Okay. But, again, it's not a bad thing to and if it was easy to add a volume histogram to an Excel chart, I would probably do it. But it's not easy to add a volume histogram to an Excel chart. I build these charts by hand in Excel. Okay, so let's look at the quarterly chart, because this is the thing. Here's some noise, right? Look how noisy this is at a certain level, and we get the big picture here. We get these breakdowns and all of this stuff, and this was a big breakdown, and it took a lot of work to recover that price, right? It's taken a fair amount of work to recover this breakdown. Now, when we aggregate even more data into under one bar and look at a quarterly chart, what do we see? And this is an update of this chart. I haven't looked at it in a couple of months because there was no need. But all the old analysis is still in play. 2016, we had a huge move up to 1375 after Brexit. Then we got a breakdown, And then we spent the next 5 quarters trading within, for the most part, trading within this 6, 7 quarters, 8 quarters, 9 quarters. Look how long this bar, we traded within this bar for over 2 years. Right? And what did we get? We got a weak rally that failed when we got back up to the top of the range. We got a 1 bar quarterly reversal. Boom, boom. We closed below the previous low in an uptrend. There's a 5-quarter uptrend and then 1 quarter to reverse that. We got a big move down and then an immediate 1 bar reversal or 1 bar reversal after a 2-quarter downtrend. And what that tells you is, again, I've talked about this before, back-to-back reversal signals or even back-to-back-to-back reversals. Back-to-back reversal signals are always really powerful because what they're telling you is that this is a false move, that the first one was the false move down and this is the better move. Right? Now, it was interesting is this is a more powerful move, generally speaking. Now, what was interesting in oil is that we uncovered a back-to-back-to-back reversal signal, set of reversal signals on the weekly chart, which was the harbinger for the complete crash in the price of oil. And I talked about that in previous market reports. I don't have that chart for you this morning. But just to give you an idea here, this was a false move down in gold. Gold wanted to break higher, but it couldn't. The structure of the market wasn't ready for it. And the central banks, the story was good in 2017 and yada, yada, yada. 2017, 2018, early days of Trump's administration. Fine. Now we're here. And then we get a breakout above this. And again, if we close above this, which will be a breakout in the quarterly chart, we have now a 3-quarter uptrend after a false move down and a strong recovery in price, slicing through 4-year-old resistance or 3-year-old resistance. And it's also a change in state. The market's not laboring under the auspice of the Fed wanting to tighten up monetary policy. We've been talking about this since the taper tantrum back in 2013. So for 6 years, gold has been building a base effectively since Bernanke's first discussion about wanting to taper off QE back in 2013. And then they delayed the balance sheet normalization, and they delayed raising rates, and just drug it out in time and drug it out in time and drug it out in time. And now we're here. And now finally gold gets it. Big question is whether the dollar is going to go with it. And I don't have a good answer for that this morning, but we'll find out in the next couple of weeks. So let's now shift to the crypto markets, because the crypto markets are telling us the same thing, which is that the world is moving to safe haven assets, and Bitcoin is now absolutely a safe haven asset. Go read my blog from yesterday, in which one of our subscribers posted a brilliant chart on the Slack channel, or crypto channel on Slack, showing the move in, showing the move up in the price of Bitcoin mirrors the move down in yield on the 10-year U.S. Treasury bond. Huge. It's a beautiful consolidation of all the noise. There's a Bitcoin in a bubble, and blah. It was a tether, and this, and Bitcoin maximalism, and all this crap, and SegWit, and 10-year bond, Bitcoin. Literally moving in lockstep with one another. That's all you gotta know. Sometimes it's that simple. Sometimes it's that simple. That's why I urge keeping your chart analysis as simple as possible. Draw as few as I look at, like Jesse's Cafe Americain and even Martin Armstrong, and I look at all the lines that they've drawn in their charts, and I'm like, just look at the friggin' numbers, for Christ's sake. They're right there. Get all that crap off the screen and just look at it. It's like cleaning your room. It's like taking everything out of your office except for your computer and a book and your coffee cup, so that you're living in a distraction-free zone and it's not chaos. I'm looking at my desk right now. I keep looking at my room going, yeah, dude, you really need to clean this place up. You got too much stuff going on here. You got those like Darth Vader coffee mug and some guitars, and I got Mises staring at me, and air conditioner droning on in the corner, and my laundry on my bed, and all this crap. And it's like, dude, clean that up. Just look at the screen. Good thing is that I can hyper focus because I'm Aspie, but still not good. All right, I'm even better when this place is cleaner. Okay, so again, that's what this is all about. So Bitcoin. Watch the 12,000 level on Bitcoin right now, because that's where we are. These are the next two areas. This is the next two potential sources for resistance on this rally, that this rally may fail here between 11 and 12,000, and maybe we'll get a correction of a month or two, which would be very healthy, and then an assault on 20,000. But the way it's trading right now, we could be looking at we could be just looking at a similar expansion to what we had the last time, from 1,000 to 20,000, from 3,000 to 60,000. Because people like Donald Trump don't know what they're doing. And neither does Jerome Powell, and neither does Mario Draghi, and neither the rest of them. They think they know what they're doing. They're working with bad data. When you work with bad data, you make bad decisions. I think that's the theme of today's little talk. All right, let's move on to Dash. So I'm going to go do this over the course of the next couple of weeks of these updates. I decided, with crypto where it is right now, there's a lot of people wondering what's going to happen. What are we looking at in some of these markets? And I know Dash is close to people's heart. I know Litecoin is as well. Obviously, Ethereum and some of the other heavy hitters as well. I'm going through the ones that I like. Okay, the projects I think have value first. If there are projects out there that you would like me to cover that you think have value and why, send me a note. I'll be happy to. I'll be happy to go grab some data, plug it into Excel, and build a chart. It's about 10 minutes worth of work. I'm happy to do it. And then sit down and look at it. I'm happy to do it. I learned so much from when y'all, bring to my attention something I don't have time to focus on, right? And, the more I learn about Dash, the more I like it. So, this is a classic breakout chart. This is a classic end of a bear market breakout chart. It's even better than the Bitcoin chart. So the Bitcoin chart was pretty impressive. So we had a downtrend, we got a 1 bar reversal, and then we traded within the range of that bar for the most part for what? 1, 2, 3, 6, 9, 12, 14 weeks. Pretty much the same length of time that Bitcoin consolidated. But look at the way it consolidated. There wasn't a lot of volatility. It wasn't Bitcoin would bust higher, then collapse, then bust higher, and collapse, and then kind of trace, and it kept tracing. It kept trying to break out. Dash just sat here and go, okay, yeah, that's fine, we're good. We'll meander around. Oh, look, and then we'll meander, and then boom, breakout, and then stair step up. And then once you get the breakout above this level, you get a huge breakout. Now we get the shorts on the run. Trade within the confines of that bar for another 5 weeks. This is what's known as a flag pattern, or an eighth note pattern. Because if you read music, that you get this kind of straight up and then this kind of thing, and then boom, retesting close to this level. So it's always nice to get a retest of the breakout level. Didn't even approach the breakout level, which is always good, meaning that the market's stronger than you would think. And then no reversal signal, because this 3-week downtrend here isn't a reversal of this bar. So this is just consolidation, and then boom, and then it starts to get a little noisy. And that's fine, because now we don't know, because now the market doesn't know what to do. Now the Bitcoin market's in broken field running, and now, all sorts of things happen. But another interesting note, again, just like we saw earlier on the gold quarterly chart, back-to-back reversals. Look at what we have here. We got a big noisy move up, then a reversal signal, and then a 2-bar reversal. Then a 1-bar reversal, then a 2-bar reversal. So not as strong a chart as the gold quarterly chart, but it's telling us we're now right at the level. Dash is trading today about 175, so we're right here at that 176 level. If we got to close above that, or we get we consolidate in here for a few days or even a week, again, would be strong. Then the next target is 222. And then points north of that start getting into multiples of that number. 400, 800, 1200, that kind of thing. Okay. Not telling you that's going to happen. That's your next target. If this resistance level doesn't hold, then 222 to 25 is your next level, and then from there you're off to the races to serious money. Okay. I think on Wednesday I'm going to do Monero, because there's a lot going on in Monero. So, all right. Can't get out of here without talking about the dollar. You know that I'm bullish on the dollar, even though the market right now is telling me I should be bearish on the dollar. Well, possible. And I'm not going to argue that what we have here, what we're seeing here. We had an opportunity to break above 98. A couple of times, there's 3 opportunities here to break above 98, and every one of them was pressed down. So markets that can't go up have to go down. Now, the question is whether or not the market has turned bearish or not, or has the market just been shocked into doing something different. Now we got this big move down, then a big move up, then a big move down. This is huge volatility on the dollar. Enormous volatility on the dollar. I'm not convinced that this is a new trend. I'm convinced that the market doesn't know what to do. Though we are looking at lower highs and lower lows each time. So this is a confirmed downtrend now. Can't argue with this. Okay. Your first support level is at 95.7, then 95.2, then 95, then 95. And a breakdown of any of all 3 of these levels, and no, the dollar now is in a confirmed bear market. If you're trading the dollar right now, you have to start thinking about it potentially getting to that level. But I wouldn't get serious about thinking about a medium-term bear market in the dollar until we break below 90, until we get a weekly close below 95. And I honestly, truly believe that will be a false move down before a melt up of epic proportions. And if gold holds above 1400 and starts pushing into 1500 land, and the dollar moves down to 95, well, that will be a classic, short dollar long gold trade, right? But once the dollar starts to melt up to the upside, we'll watch what gold does. And I bet you that gold will not, if it's trading at 1500, will not collapse to 12. It won't ever, we won't ever see 1350 again. Okay. Because everything else has fallen into place. All the major safe haven assets are in massive bull markets. Gold is now in a bull market. Bitcoin's in a bull market. The only thing left is the dollar. The dollar's had its strong run, so now it's slightly out of phase with the rest of everybody. Now, as Martin Armstrong would put it, we could have a phase transition where we should get meltdowns, we get melt ups, and vice versa, based on the cycles. And if that happens, Katie bar the door, now we're into, much, much different territory than we've been before. So again, things are setting up that feel like there's fundamental shifts, there's fundamental changes happening in the markets today. And then the last thing to talk about is the Dow, because look at what the Dow did this week. We didn't really talk about it very much. Most people, interestingly enough, with everything that was going on, nobody wanted to talk about the fact that the Dow closed at an all-time high on Friday. It was an all-time high closing price, above 26.7. Again, it's a safe haven trade. And again, false move down, massive move to the upside. Everybody wants to be short the Dow. Everybody wants the Dow to fall for fundamental reasons. Everybody wants to believe that there's a recession coming, is this and that, because all these things, that means conventional wisdom says the Dow should melt down. Yeah, but not if money's going to flow out of Europe and the emerging markets. They're all going to just flood into the U.S. markets and go, just get me out of crap. Why am I in this crap? Sell it all. Buy Johnson & Johnson. This is what's going on. Again, sometimes it's not that hard. But it is if you're willing to listen to conventional wisdom. Because conventional wisdom is conventional for a reason. It works when everything's normal. But we're not in normal. I point out all the time, the Dow is currently 3 times more volatile on a week-to-week basis than it was just in 2017. The rules have changed. And therefore, your analysis has to change with it. All right, that's what I've got today. I think I've probably spoken more than enough. I'm going to be taking off for the rest of the afternoon. I will not be around, so if you need to get a hold of me or whatever, ping me on Slack or ping me on. I'll have my phone with me, but I'm going out for the afternoon. And that's that. So let's get this out the door and let's get this published to y'all. As always, thank you all so much for being subscribers. Thank you all for your hard work and diligence, because I think this doesn't work nearly as well without help. And the help that I get from all of you is absolutely appreciated and absolutely necessary. So you guys take care. You have a great Sunday. We'll talk soon. We'll talk Wednesday. Keep your stick on the ice.